Is Palantir an undervalued gem of a stock? Well, the short answer is yes, but let me explain. Big data and artificial intelligence specialist Palantir is somewhat of an enigma in my opinion. Despite selling their software to some of the largest enterprises in the world, including several US government agencies, the company has been at the center of several different movements. You see, a couple years ago, Palantir briefly became a meme stock, thanks to a loyal social media following, as well as strong support from ARK Invest CEO Cathie Wood. More recently though, I wouldn't exactly call Palantir a meme stock, as it's a legitimate company that truly has some powerful software that it's offering the world. However, to understand why this stock is so undervalued in my opinion, instead of making a boring video looking at Palantir's financials and outlook, I'm gonna focus solely on the valuation and compare it to some other tech companies. So where does the market value this stock? When it comes to valuation, there are actually a number of metrics that factor into the determination. While the capital markets can help paint a picture of where a stock was valued versus where it's valued today, there's actually a lot of work that goes into determining whether a stock might be undervalued or overvalued. You see, a lot of big tech companies like Microsoft, Google, Amazon, and even Salesforce are all aggressively investing in AI technology. However, each of these companies could be considered a diversified conglomerate. More specifically, these companies operate in sectors such as gaming, e-commerce, advertising, among others, in addition to areas such as generative AI and machine learning. And for this reason, I think it's a good idea to benchmark Palantir against some other big data analytics growth stocks. Given the impact of high interest rates and their effects on profitability and free cash flow, the disparity among these companies can honestly be a bit tough. Therefore, this chart is comparing the price to sales ratio among a lot of companies. And as you can see, while Snowflake and MongoDB trade at meaningful premiums to the rest of the field, Palantir trades in line with companies like Datadog and ServiceNow. And while all these companies are heavily invested in AI, I think it's genuinely interesting to see which names are getting support from the market currently. To me, looking at this analysis, I think the most interesting takeaway is that Palantir essentially sits right in the middle. However, this doesn't exactly tell the full story, because Wall Street also plays a role in this. So what exactly is Wall Street's perspective on Palantir? Well, even though some analysts forecast Palantir reaching a $5 billion revenue by 2027, they still give Palantir an extremely conservative price target of $25 per share. Still though, there are companies like JP Morgan who downgraded Palantir's stock to $8 per share, which implies around a 40% drop from the current trading levels. Is this actually realistic though? Well, according to several public reports, the bank's downgrade anchors on the gap between Palantir's AI progress and how much it's actually moving the needle for the company. This is an interesting stance though, because Palantir's management has highlighted how much the demand for the company is experiencing in its AI products. For example, in Palantir's most recent shareholder letter, investors learned that the company's latest AI development has been deployed across 100 organizations, and the company's current pipeline has over 300 identified opportunities. So I think it should come as no surprise that I don't exactly agree with Morgan Stanley, although it would be nice to see a more pronounced reflection of AI demands in Palantir's financials. My view is that Morgan Stanley's stance is a bit short-sighted, because Palantir truly is in an incredibly unique position. While the company sells its software in a ton of different industries and markets, I think investors should still understand some nuances. Mainly that the sales cycle of enterprise software can be pretty long, so realistically, it could take weeks or even months of demoing products before any formal deals come to fruition. Still though, I think what Palantir is doing with AI is incredibly robust and unique, and the fact that they're focusing on simply building the best product that they possibly can right now, according to the CEO Alex Karp, I think that speaks volumes. So even if Palantir does slip to $8 per share like Morgan Stanley believes, you can bet that I'll still be buying up shares if Palantir hits these levels. In fact, I think you'll really enjoy this video right here, where I explain why I believe Palantir could make you a millionaire, so I urge you to check it out if Palantir has piqued your interest. Thanks again, and I'll catch you next time.